Good day to one and all. This is Dr. Sivaraman of iknowindustries.com. Hope I am audible to you. Let me display the PowerPoint presentation. Good day, Sandra. Thanks for confirming that the audibility is fine. Asian session live market analysis on January 23rd between 5 and 5:30 GMT. We will review the market using the live market quote page. Let me give the link for the live market quote page. And I'll also focus the camera over the live market quote page. So currently, Euro is trading below that of 1.29, 1.2894, 1.2896 are the current levels. 1.2854 was the low that was set based on the average traded on Friday, and 1.2907 is the high, and 34 pips for negative net change is seen. Then in the case of GBP, it is holding the 55 level, 1.5553, 1.5557 are the current levels, 1.5527 is the low, 1.5564 is the high, 20 pips negative net change is seen. So from that of Friday close level, GBP has dipped about 20 pips and Euro has dipped about 34 pips. And because of that more dip in the case of Euro, you find Euro GBP has come down about 11 pips, currently trading around 82.89, 82.92, 82.77 is the low, 83.00 is the high. So both are showing the USD gaining move to start with for the week beginning. So we understand that week beginning moves are false moves, so they intend to make the opposite to that during the later part of the day on tomorrow. Then USD is trading around 77.03, 77.06, 76.94 is the low, 77.06 is the high, and 2 pips positive net change is seen. And you find the spread is very narrow as usual. Then USD CHF, which came down to 0.93 area, which has gained about 50 pips. And currently you see that 93.62, 93.65 are the current levels. 93.61 is the low, 93.91 is the high, 16 pips negative positive net change is seen. Then Euro has made about 35 pips negative net change. CHF has gained only about 16 pips. As a result, Euro CHF is still hovering around that of 1.207578. 1.2072 is the low, 1.2080 is the high, 9 pips negative net change is seen. And they are expected to gradually gain from that of the consolidated level. So as far as the majors are concerned, they are showing the USD gaining move to start with. Then with regard to the commodity pairs, Canadian dollar is trading around 1.0131, 1.0135, 1.0134 is the low, 1.0160 is the high, and almost flat condition is seen. Then Australian dollar has gained some more, 1.0489, 1.0492 are the current level, 1.0456 is the low, 1.0492 is the high, and 7 pips positive net change is seen. As far as the commodity pairs are concerned, they are showing USD weakening move. It is a contrarian move. Because of that, the majors are showing the USD gaining move, the commodity pairs are showing the USD weakening move. We understand that commodity pairs are leading the rally on the upside, or they are expected to show the USD weakening move, and slowly Euro and GBP are also expected to show the USD weakening move, but the denominator currencies like USD Yen and USD CHF are expected to hold the gain and slowly gain whenever there is a dip in the case of Euro and GBP. So you find subdued moves happening. The net changes are nominal in all the currencies, and also in the case of Yen crosses, you find that Euro Yen is trading below that of the psychological level 100, but still 97 was shown and they are holding around 99 level, and GBP Yen again 117 was shown and then they are trading currently around 119 level. 13 pips negative net change is seen in the case of GBP Yen, and Euro Yen about 25 pips. and they are expected to gain the level during the course of the day. And you can note down how exactly the week beginning they make the move. Just exactly opposite to that, they will be doing it during the US session on coming Friday. And that is how they handle the market. So if you understand that there are specific type of and sequence of moves, then it will be easy for you to take the position now or during the early European session and close it during that of the Friday upward move. Let me just focus the camera over that of the PowerPoint presentation. So we use the live market code page as the main tool to understand the expected market moves, and start with we note down around 3:30 GMT the initial lows and the highs in the 4 majors and 2 commodity pairs, and these are all the 6 pairs the players make the moves and try to bring in the volatility with regard to the process as well. So if you track them properly, the 4 majors and the 2 commodity pairs, and exclude them instead of trying to read them as the numerator and the denominator, but you read the majors separately and the commodity pairs separately, then you will be able to understand. Now you find that the majors, Euro GBP, USD Yen and USD CHF are showing the USD gaining move, whereas the commodities are showing the USD weakening move. So this way, if you could separate it, then you will find the moves could give you the clue how exactly the market is expected to make the moves in the subsequent part of the day. Now, after using them as the reference level towards the level throughout the day, the initial lows and the highs, we identify the type of moves. So initially they just made an upward and the downward move to set the spread, and subsequently they are making the swings within the low, between the low, initial low and the high. So whenever they make a move between the low and the high, they are all referred as swings for the day. And in case if they go above that of the initial high and trade, then you come across either it is in the form of an extended move or an intentional move for more than 2 sessions. Extended move could be limited only to 2 hours. So either it could be on the upside or on the downside. So we have to understand that if they make an extended move on the downside, they wanted to make the intentional move on the say extended move on the downside, then intentional move on the upside, vice versa. That is how they make the sequence of the moves in the market. So if you note down the session timing in GMT, as I have been giving it in various webinars, and if you follow those timings, then it will be easy for you to understand how they make the swings during near the low or near the high during start of the session for 30 minutes. And if they don't breach the initial high in 30 minutes of observation of the market, then they start making a drop up to that of the low. If needed, they may do a downward stop and come above. If it is a downward stop, then they will just come above that of the initial low in less than 30 minutes. If it is an extended move, then they may come above that of the initial low in 2 hours time. If it is an intentional move, then they drag the market downward for 2 sessions. And the third session, they make the further downward move to pretend as if it is going to fall very big and then reverse it. So this sequence of moves you can easily identify when you follow the market using the GMT time frame. So in the live market code page, you come across the GMT time, and that can be used effectively irrespective of the time zone to which you belong to. Then in the market trading, once we identify whether the market is making quick moves or not. So when they make a very quick downward move, then we can buy. When they stop cutting the new low for more than 10 minutes to 30 minutes. Similarly, if they make a quick rise and stop cutting the new high for more than 10 minutes to 30 minutes, then we try to take a sell. So there is no question of bullishness and bearishness involved in our trading strategy. We only find whether we can identify whether we can do a sell and buy trade or a buy and sell trade. Then Still, our reading can go wrong, so we limit the risk using an entry stop or a stop of 30 pips. We don't want to take more risk by keeping 50 pips, 60 pips, etc. 50 pips, we keep entry stop or a stop only in the case of crosses where the liquidity is less. Then, once the position makes profit, we try to keep stop at entry and trail the stop and keep the limit. The limit can be taken away from that of the market in order to maximize the profit, but we don't trail back the stop. So stop will be trailing progressively as the market moves, and if the market reverses suddenly, our stop will protect our profit and we continue to get the trading opportunity. Then next trading opportunity, we try to do a buy and sell or a sell and buy. So that is not related to that of the previous trade. The previous trade might be buy and sell, and the second trade can be sell and buy also. Absolutely no problem with regard to that sort of trades, but we have to identify the type of move they make. Accordingly, we take positions in the market, either a sell or a buy. Now, with regard to the initial lows and the highs, 0 formed the low 1.2854, which is shown now, but actually we are not gone closer to that. And 1.2907 is the high. So you come across the market is holding around below that at the psychological level 1.29, and they may make a brief downward dip during that of the early European session as a weak beginning false move, and then later on they are expected to gain up. And so they are not breached the low or the high, they are only making the swings in the case of Euro. And in the case of GBP, 1.5527 is the low, 1.5564 is the high. They are closer to that of the high, but still they are not breached the high. So when Euro makes a dip, because it is showing more negative net change when compared to GBP, GBP might also come down a little bit and later on go up. And because Euro has come below 1.29, still they are holding GBP above 1.55. You can understand this is mainly to handle Euro GBP cross on the downside. So earlier people were thinking that it is Eurozone crisis, so GBP is going to fall, irrational relationship. And whenever GBP falls, then they think that Euro could fall further down. And now we understand that GBP is the currency they use to create the market sentiment and act against that of the traders. Then in the case of USD Yen, 76.94 is the low and 77.06 is the high. They are not breached low or the high. CHF 93.61 is the low, 93.91 is the high. Still they are not breached. Then Canadian dollar 1.0138 was the initial low. They breached the low and formed 1.0132. So Canadian dollar, being a commodity pair, is trying to show the USD weakening move. And 1.0160 is the high. So you find 3 pips negative net change is seen in the case of Canadian dollar. And in the case of Australian dollar, 1.0456, 1.0492 is the high. They are not breached the high as a low. Excepting Canadian dollar, no other currency come across either the low or the high are being breached. And you know that Australian dollar, they have taken it almost close to 1.05. So further upside momentum is very limited. So here again in the case of Canadian dollar, it appears that it is going to fall, but they are expected to slowly reverse and show the USD gaining move in the case of Canadian dollar. That is, USD CAD is expected to gain levels and Australian dollar is expected to lose or hold when Euro and GBP are gaining the levels. So currently you find that Euro Australian dollar will be on the downside and GBP Australian dollar will be on the downside because Euro and GBP are showing negative net change and Australian dollar is showing positive net change. So this is how, by looking at the majors, you can straight away say what is happening in the case of crosses. Once you understand the relationship, whether it is in the numerator side or in the denominator side, then you will know what sort of moves they intend to make, because weak beginning false move could prevail during the Japanese and start of the European session. And there are certain occasions wherein they throughout the day they make the weak beginning false move, but Now this time they could restrict the week beginning false move only to that of the early European session. So during Japanese session, swing and rise moves may be seen. They may go up to that of the high and then quickly dip during early European session, and they may come to low or come to the middle level and then rise again quickly, and there could be a spike on the upside during that of the European session. And if the volume is good, then they could make a spike, and you could see that euro going to 1.30 very soon. And US session, a quick rise could be seen, and they could make higher level swing slowly, and then tomorrow they are expected to open upward and start making further gains. So keep in mind that the trend is upward in the case of euro and GBP, and also in the case of USD and USD CHF the trend is upward, but in the case of commodity pairs they are expected to show the USD gaining more slowly. Until such time they will be making sideways moves. They may just lead the rally and continue to hold, making sideways moves. Not much of an upward move could be seen. So week beginning false move may be seen during the early European session. During that time you can try to take a buy. In case we are hedged, you can just close the hedging of that time. Then try to wait, keep another hedging order, wait for them to make further rise during that of the late European session, and there could be a spike happening, and for the quick rise during that of the European US session. So it all depends upon the volume. If the volume is very good, it could be a spike. Otherwise, it will be a slow rise during that of the late European session. Let me minimize the PowerPoint presentation and try to answer the questions which are asked here. Let me focus the camera over that of the line of the page. Then Kissin, Euro GBP Australian dollar yen made a downward week beginning false move, indicating they would take them up. Yes. Canadian dollar and CHF made an upward week beginning false move, indicating they would take them down. But it could be sideways in the case of denominator, not necessarily corresponding drop. As you see that euro has dropped about 34 pips, whereas CHF has gained only about 16 pips. So that sort of variations they are expected to bring in. That is also part of contrarian move. Then currently Australian dollar is leading upward rally. 10 yen also starts to lead. Euro is expected to gain more. See, there are two assumptions in the market. One is because the crosses gain, then which could trigger the majors to rise. But according to my understanding and analysis, and also interacting with various brokers and also the banks, dealers, I'm of the opinion that they make only the moves in the case of majors because of that the crosses bring in some volatile moves. Then similarly, once GBP also start to lead, GBP is expected to gain further. Okay, yes. Then Irish. Okay. Then yeah. What about USD CHF moves? Today it could be a sideways move and slow gain in the case of USD CHF. And tomorrow they are expected to gain more. And we are in the last week of Jan and should expect trend reversal? No. Because one more week is there wherein January gets over, 30th and 31st, and the new month starts, the first, second, and third. And at that time, we'll come across more volatile moves in the market. And I explained many times, whenever the current month gets over in a week and the new month starts in the same week, and within the matter of 5 days, instead of 2 weeks, within a week, they bring in all volatile moves in the market and try to hit the stops either way and then continue to show the trending move. This long-term focus, the euro is expected to gain. What should we expect as the monthly trend reversal move? Should we expect a brief downward move or either way Thursday and Friday? this week. No. This week they are expected to gain very quickly the levels in the case of Euro and GBP, and then the last 2 days of this month, 30th and 31st, they could make very volatile moves and gain for the levels. Then the 1st of February also they are expected to gain the levels. Then 2nd and 3rd they are expected to bring in the volatile moves on the downside before further events and also action in the market. Then week beginning false move will be seen the following week, and then you'll come across Euro and GBP rising very nicely. Then TY. Do they always handle the crosses in the same order during the day? Yes. Watch it and understand. Watch the live market code page, you will be able to get that. And if you look into the chart, you only focus one currency at a given time. And in the way, when Euro GBP, for example, if you try to track, then you have to follow the chart in the case of Euro, follow the chart in the case of GBP, follow the chart in the case of Euro GBP. If all the three charts are being followed, then you will be able to get that understanding of it. Instead, if you look into the live market code page, you can understand whether they are making a downward move or an upward move, and correspondingly what sort of reaction is seen in the case of the respective cross. I am only trying to give it in a simplest format by looking into the live market code page. But blindly looking into it, you will not be able to understand anything. But if you fine tune it based on the concepts of what I explained to you, then you will find some sense in watching the live market code page. Then able. Is there any pattern the way majors move each Monday? Yeah, they show the week being a false move on the downside, and sometimes they just gain it only during that of the US session. And from now onwards, they are expected to gain from that of the European session itself. The week beginning false move might be restricted to early Japanese session and the early European session afterwards, namely in the form of downward stoppers, and to set the initial low for the day. Then afterwards they are expected to show the trending move. Slowly they will bring in the moves more visible because once the trend becomes visible, a lot of traders enter into the market. So on Friday, you know that when Euro went up to 1.2985, a lot of traders jumped into it because it is likely to cross above 1.30 on Friday. That's what they thought. Then when they all entered long at the higher level, the players showed the lower level. Because the players focus on money making and we traders focus on the levels. So there comes the difference. And they will again show 1.29 and 1.2985. At that time, the traders will feel that it is better to sell there because they may do the consolidation around 1.28 to 2 for a long time. Then they try to take it upwards. It is like a gambling den. In a gambling den, they will pretend as if they are giving the profit to you so that you commit more, and later on they take away more money from you. But we have to understand the concepts, how they can do it, because it is an international market, so they can read and trade along with them. It's not like a gambling den. If you earn enormous money, then they'll use the muscleman to take away the money from you. But it is not like this in the case of forex market. Then S's. Gray's new comes to 1,600 GMT. Do you think Euro will keep on falling until that time? Gray's news. I think news it might be. No, I don't think that Euro is expected to fall till such time, and it is expected to just make the upward move from that of the European session. Let us observe it during that of the European session and see whether further rise potency is seen. Otherwise, they want to stall it or hold the market just like this without breaching the high or the low, depending upon the volume. So now Australian dollar, they have come closer to high. So probably they could reach the high and trigger, and that could give the trigger for the late trigger for Euro and GBP during late session to make an upward stop on the above that of the high, and then make a small dip during the European session. I am not encouraging anybody to do sell and buy trade, because we need to have the very smart mindset to close in case if we do the sell and buy trade with a profit. Otherwise, calmly wait and let them do the drop and try to take the buy position. Then the upside is unlimited. So it is easy for you to earn on that sort of trades. Okay, no more questions. Let me go back to the PowerPoint presentation. So expected market moves for today, swing and rise moves may be seen during the Japanese session. The session timings, I have given it here. You can make a note in case you are not familiar with this. And a small dip during early European session between 8 and 9 GMT. Then afterwards they are expected to gain the levels. And US session onwards they are expected to make, or late European session itself, they may start gaining the levels very quickly and continue to swing at a higher level during the US session. And tomorrow they are expected to make an upward gap opening and continue to rise. So avoid doing sell and buy trade. In case if you miss booking profit, you might be in trouble. So the good buy opportunity could prevail between 8 and 9 GMT during that of the early European session. Then initial lows and the highs, probably Euro could make a small visit closer to that of initial low or to the middle level. And the GBP is holding very strong. They may make an upward shot and just come below that of the initial high and then go up, because the negative net change is very less, 21 pips. And in the case of yen, it is showing positive net change, and still they are not reached the high or the low. And in the case of CHF, they are holding it closer to that of the low. Now 93.61, they may make a downward stop, and when Euro and GBP are rising and start gaining the levels. Already in the case of Canadian dollar, they have made that downward move, and currently it is trading below that of 1.0138, and so you could come across little more downward move for another 10-15 pips before making further rise. At that time, they could make an extended downward move for 2 hours, then start gaining the levels in the case of Canadian dollar. At that time, you can take a buy, so quickly they will gain the levels. And Australian dollar, it is closer to that of the high now, and still 1.0492, they are not breached it. They are likely to breach it now to give the trigger on the upside for the late Japanese session to firm up or make an upward stop and above that of the highs, and then a small dip during the early European session, coming closer to low or in the middle level in some cases, and then they are expected to gain back the level. So weak beginning false move could be restricted to that of the Japanese and the early European session. Keep that in mind and try to trade accordingly. So I take this opportunity to thank FX Street and also you people who have come here to listen to my talk. Understand how exactly the market reading has to be done, then trading becomes very easy. So tomorrow again I will review the market between 5 and 5:30 GMT during yet another session of Asian Session Live Market Analysis. Thank you one and all. See you tomorrow.